Okay, assume this is a bar chart. Assume that I did not take art in school. This is a low of some degree. I don't know what the price looked like back here, and I don't really care. It's just a low of some degree. The market comes up off of that and makes a high, and then it backs off. At this point, and I'm explaining my terminology to you, at this point, I have what I call a potential 1, 2, 3. Are all of you familiar with 1, 2, 3 formations or ABC formations? Some people say they can only occur at highs and lows and things. To me, anytime you make a low, a high, and then come down and you haven't taken out the low, you have the potential of a 1, 2, 3 formation. It's confirmed if price does not take out this low and then turns and takes out this high. Then you can legitimately say you have a 1, 2, 3 formation. And I'm afraid in some cases I'm just so terribly basic that I lose you, but a market can't go up if it doesn't do that. I mean, literally it can't. Yeah, it can go sideways and it can swing up and make new lows and swing new highs, but in the long run, it absolutely has to do that to go up. I mean, it's just as simple as it is. And the reverse is true. Do I need to draw a down one? Because it's the same thing going down. You make a high, come down, make a low, swing up, make another high that doesn't take out the previous high and take out the low. A market has to do that to go down. On some time frame, on some level, it just has to do that. Now, somebody's going to show me a chart where it didn't happen, right? So I use something that I called intraday market mapping, for lack of a better term. It's a form of pattern recognition, but everybody uses pattern recognition, so I had to have something different. And what I'm doing, I don't think there's a need to bore you with all of this stuff. What I do is I use these 1, 2, 3s on my intraday charts to try and filter actual system signals. This is a daily corn chart, and I really want to point out that if the lows are about equal, I still call that a good 1, 2, 3 like occurred here. And they can be bigger patterns, and they can be made up of only 3 bars. Anytime I see a low, a high, and a higher low, it's potential, and that's something that I'm willing to take advantage of. If you were just trading these, incidentally, the concept is to buy when it takes out the 2 point and put your stop below the lows.
You got an overlay of two separate 1, 2, 3s. Why don't you walk through both of them? And
okay.
Quickly, just go. Here's 1, 2, 3, and here's the other 1, 2, 3. And why didn't the first 1, 2, 3 trigger this buy?
Well, it actually did. It actually did. I didn't have room to write buy, so I just put a B in there. But the market came down and made a low. And then it came up and it made a high. It wasn't much higher, but it was slightly higher than anything had been in the last few bars. And then it turned back down, which at this point, how can I do this? You're cheating. You know what the chart did. Okay, if we're looking at it at that point to me I have a potential 1, 2, 3. I've made a low, I've gone up, I made this low here, I've gone up, and I've come back down, but I haven't taken out the original low.
You're waiting for the last bar to be quantified as a pivot low.
Before I buy it, I am. See, at this point, right here, I don't know that that's a pivot low. Okay? It is a potential 1, 2, 3. What I'm waiting for is price to take out this intermediate high. If it goes through that high, then it confirms to me that this, in fact, was a pivot low higher than the previous low. So the little 1, 2, 3 is just made up from that low to that high, then a higher low, and then we wind up going through it. So that is a buy right there. Buy there. And then in the bigger picture, we have the 1 point down here, up to the 2, down to the 3, and then we do eventually take that out as well. So this is why I'm saying this actually, at least in this chart, this is actually the low, which is how some people claim a 1, 2, 3 has to set up. In my terminology, this is a 1, 2, 3. Even this, from here, that's a 1, that's a 2, that's a 3. Anytime the market stair steps like that, as far as I'm concerned, I call it a 1, 2, 3.
In
The question was, is it a daily trade or a weekly trade? What I'm showing you right now is applicable to any time frame. It really doesn't matter. It can be a monthly trade, it can be a 5-minute trade. The pattern sets up on all charts. What we're going to do is look at it intraday as it relates to a daily system. We're going to look at it on intraday charts, but we have the pattern on 20-minute Deutschmark charts. We have a series of 1, 2, 3s there. There's a 5-minute S&P chart with 1, 2, 3s. There's a daily live hog chart with 1, 2, 3s going down. 1, 2, 3 is set up on all charts virtually on any time frame. Now, the key to how I make use of these is I look, well, incidentally, just if you're real sure, that's a 5-minute. I guess I showed you a 5-minute. Even on 5-minute charts, they set up pretty well. The key to it, let's go back to the original system. Let's go back to taking 65% of 2 days true range as a breakout. And let's go look at an intraday chart as it relates to that. Oops, that's not an intraday. Okay. We're still talking about the same subject. It's going to sound like I'm different. Stay with me on this. The market tends to move in threes. There's a real broad, basic statement. The market tends to move in threes. If the market's trending up, it tends to go up 3 bars at a time, down maybe a bar, bar and a half, and then go up 3. Even in a strong trend, you might get 3 days against the trend pullback. 5-minute charts, daily charts, doesn't matter, 3 bars at a time. If you were to measure the size of all moves, the majority of them would be 3 bars. Now, I'm not saying you don't get them that are 7, 8, 9, 10, but the majority of them are 3 bars. So what I look for on intraday charts is I look for these 1, 2, 3s to set up just in front of a system signal. Now let's just suppose, since we don't have the daily chart here, let's just suppose that 474, let's call it 474.60 is the place that we're supposed to sell based on our breakout system on the daily, 65% of 2 days actual range. What we can do is we can go down and look at this intraday chart and see, are we setting up some sort of 1, 2, 3 in front of that entry point? And you talked about cheating, not losing your 40 bucks. What if I can get in the S&P 2 ticks better than what my system entry was? What if I have a 1, 2, 3 where my sell point is actually 2 ticks better than the system point? Then I can effectively get positioned 2 ticks better than the system, be 50 bucks ahead of where the statistics told me I was, and this is the most important thing as far as I'm concerned, and I can place my stop right up here. In the daily based system, we didn't have any stops. All we had was the 65% on the other side of the day, which is pretty huge in markets like the S&P. Okay. What you can do here is sell it as it goes into that number, getting positioned a couple ticks in front of it, use much, much tighter risk, and be able to participate in what hopefully is a day, a 2-day, 3-day trade, but get your risk off of your intraday charts. Now I'm showing you a 5-minute chart here. In my own trading, I do a lot more work on 15-minute in the S&P and meats and grains and stuff, and 20-minute in currencies and bonds. Yes, sir?
Taking the converse of what you said, if your system, say, triggered that buy at 475.20, would you not take the trade? In other words, the 1, 2, 3 set up after where your system said to get in?
If the system had a buy right here,
No, a sell at 475.20, let's say, which is above the 1, 2, 3 setup for the sell.
You're looking for 1, 2, 3 in the opposite direction.
No,
Okay.
no. your system, you said, suppose your system said, sell at 475.60, right?
474,
474.60.
460, right.
Okay, you said you could get it 2 ticks better.
Or,
Let's
yeah,
suppose
the
your,
three.
or whatever, however many ticks.
Right.
Let's suppose your system triggered above that 1, 2, 3 setup. In other words, at 475.20 or whatever. Said, okay, I want you to sell at 475.20. You hadn't, the 1, 2, 3 hadn't occurred. What do you do then? In other words, the 1, 2, 3 occurred after when your system said to get in.
Well, it depends on the question is, what would happen if the system had triggered a cell basically up in this area,
Right.
up above the 1, 2, 3? Well, I'm going to give you two answers to that. One is because the system that we're dealing with is a breakout type system, in the chart that we're looking at here, that it can't happen because the system has to go down to it. In theory, I tell you what, let's just assume that this is going the other way around, because I think I can answer your question by reversing it. Let's assume the system had a buy right here, okay? And we have a 1, 2, 3. Can everybody see that there's a 1, 2, 3 here on the buy side? Okay, so your question basically is I have a system entry, but I don't have a 1, 2, 3 yet, okay? All right, there are two ways to handle that, and that's kind of the other side of the way I utilize this. I told you markets move in threes. I look to see how many bars I have up. And again, I want to make this clear. This is a 5-minute chart that we're doing this on. I predominantly use 15 to 20-minute charts in my trading, just because the shorter time frame drives me nuts. It's not that it's not valid on here. I just like the longer time frames a little bit for my sanity. What I look for is I look to see if I have 3 consecutive up bars before my system signal. If I have 3 consecutive up bars before the signal, I don't place the order. I wait for a 1, 2, 3 to set up.